Hi guys, you're welcome to our channel today. This is Trader C Brown and I am going to be doing a forecast analysis on GBpusd week 17. Last week we did week 16 and we were able to analyze the market based on directional mode. And guess what? Me and my team last week, we were just smashing the market even though it was consolidating, but we were able to take advantage of the market using our strategy. So if you're not in our Telegram group, you are not among our teams, you better be part of them because you will learn so much about trading every day. So join our Telegram group, the link in the description below. All right, for those of you joining us for the first time watching this video, I want you to hit the subscribe button and turn on the bell notification because you're going to be getting more information about what we do, how we trade on a weekly basis, looking at some other currency pairs that we might bring into this watch list. Right now, we're dealing with GBpusd and Euro USD. So we might be bringing in some other pairs on our watch list. So if you want us to trade your pair or look at the analysis, forecast your pair, look at the analysis for you every week, I want you to hit me on the comment section, put your pair there that you love us to do analysis on a weekly basis so we can look at the direction of the market every week together. All right, I hope that is clear. You got it. So now let's look at week 17, what we expect to trade on GBpusd. Now, for those of you who have been saying my name, Trader C Brown, Charles Brown, FX, and all of that in different Telegram and different groups, listen, I do not call people to trade crypto. I don't send information about crypto or investment or trade account management to anybody, to anyone. I don't do that. So on my Telegram group, which is official, I show my face. I send messages with my voice note. People come online. We do live chats. It is active. It is communicative. It is educational based. It is strictly close contact with my followers. So if you are not seeing me on this Telegram group, on this channel, I'm not the one. So get out of there. Those are scams. They are just replicating my account everywhere. If you type my name now or my trading account handle on any Telegram group, you'll be shocked to see numerous accounts come flowing up. It's terrible. But you know what? We got to do what we got to do, but you also be smart on your side and stay away from scam, okay? That will help you. Okay, now let's go. After the disclaimer, we are going to look at the charts. All right, now we're looking at the 4-hour time frame because I used to actually look at the daily with you, but at the moment we can see that the daily is obviously an uptrend, so we don't need to talk much about the daily because if you can just look at it, it appears that the daily wants to push higher. But we have an issue with some of these candles here, which we're going to actually address in the 4-hour time frame. But right now, if we're looking at the daily, which is not bad to look at, we might be looking at this particular key zone for possible resistant level. Okay, we have that key zone as a resistant level, and then we have this particular zone as a support level. So that's 124, the region of 124 and the region of 125 and 125.50. So that's a good area of price movement for the past couple of days. All right, so now let's go back to 4-hour time frame and look at before we go to 4-hour time frame quickly, let me show you something about the trend. You can see why I'm talking about trend right now, because the market finally broke that previous highs that were there, which created an M pattern and failed to drop lower than that low. And then we saw price eventually rally back up to break out those highs with this push up, and then consolidated a while by creating an M pattern. All right, and then drop again. Instead of dropping and breaking the neck, the market failed to break the neck of the M pattern. So if the market failed to break the neck of the M pattern, which we saw here, so obviously the market wants to rally back up. All right, now the reason is we can see that the pattern failed in the higher time frame. This is even one of a daily time frame. So we can see that the pattern failed there to break the neckline to drop lower or even lower, all right, before rallying back up. So the market failed to do that. So that's very clear on the daily time frame to understand the direction. So now let's move to the 4-hour time frame to help see clearly what the market is giving us here. Now on the 4-hour time frame, it's very clear that we have an uptrend, okay, which has been respected over time, and then it can be double trend that you can see there. We have some double trend the market has given us, which is obviously this one is no more relevant, so we have to stick with what is relevant right here. So now that is the most relevant trend line that we can see at that level. So obviously the last one will be better, so let's stick with that. But at the moment, we have different lows that can be used as target lows. But at the moment, we're looking at what the trend is. It's uptrend. That's what I'm trying to get your attention to. All right. It's uptrend. So the market had a channel, all right, that was like this. And then eventually broke out of that channel. All right. And then consolidated. Remember, we talked about this channel last week. So now the market break out of that channel, consolidated, trading within that zone, and never broke higher or lower, but just in between that zone. So at that moment, we knew that the market was going to stay there for a while because of the fundamental news that was in the week. Now, where do you think the market is going? First, we found out that the market failed to break this 2400 level to the lower side, and then take our structures to start selling. But we also see on the 4-hour time frame that we have a downtrend formation. Okay, on the 4-hour time frame, we have a downtrend formation. So what this actually signifies, two things: either the market wants to continue consolidating before breaking out to touch this key level or take out the eye, or drop to break this level, all right, drop to break this level, and then create a pattern to start selling to these lows, to these lows, to these lows. You get it? So we're looking at all of those dimensions. But right now, what is going on here is where we need to pay attention to. The market is creating a lower highs, okay, and then lower highs and lower low there, but fail to break this low. So we still have this low, this high, okay, as a structure to pay attention to. So what that means is I'm looking at the market to break this high, okay? I'm looking at the market to break this low on the 4-hour. For me to sell, it had to break this low. For me to buy and even buy higher, it had to break this high. So now I have a very sensitive area. First, this zone, I need to know that the market will break it or reject from it. So if the market break this counter trend line and push higher, all right, onto the zone, I will be waiting to sell if the market failed to break out of this. So look for price action, look for reversal pattern that the market may show at that key level, and then I'm going to be selling down all the way down to this zone. And that will be an amazing trade for the week. But if it breaks and sells, it could pushes up and sell and break this low, then eventually we have a proper structure to sell. Why? Because this is still a higher high. Depending, I mean, this will be now a high. Probably the market reject from the zone, creates a lower high, a full lower high at that level. Then before selling, breaking this level, pull back, and then we'll look for sell. So this is the way you want to see the market move in that direction. But here's the point I want you to see. The first thing is we want to see the market break above this high. Okay, and then look for price action in this zone. You want to see price action before you sell. You want to see the behavior of candlesticks behave at 1.20, 1.22, 200, 22, 500 within that zone, or 22, 25, 22, 1.25, 400. You want to mark this zone because that was a previous high. But if the market breaks the high, listen, you're waiting for a pullback, whichever zone is going to get to, and then you continue to buy. So that's what you want to look at. But if it fails, if the market fails to go to break this high and then create a new higher low, all right, a new lower high, sorry, create a new lower high, then you're looking for selling. You have to sell this market to the zone and take your profit and wait for it to break. If it had to break, let it break. If it doesn't break it, then wait for a buy. that means this counter trend line will have to be traded up again. That means this trend line will become effective again by adjusting it whenever deemed fit. So it's very important to understand what I'm looking at. So this is the overall picture. Now let's go to the 1 hour time frame and see clearly what the market is doing right now. Remember, we have to trade within this week. We are looking at the zones, price trading within the zones, and that's 150 pips, and to and fro, that will be 300 pips of the market trade for the week, and that can be possible. But assuming the market failed to do that, so we're looking at this key level here that the market has been using on the 1 hour time frame. Okay, we see this key zone here that the market has been respecting on the 1 hour time frame. So therefore, we want to see that price take out liquidity in that zone, break above it, push all the way up. Okay, so we can use this as a support, which is resistance right now. We want to see on the 1 hour time frame that the market push above this, give us as a support, and then we can buy this little trade, maybe about 50 pips or so, or 60 pips, and then we take that trade and watch for price action and then drop it low. You get it now? And then see what the price do. If it keep pushing ahead, then it's going to break this high and go up. If this place bounces off again, if price bounces off this zone, and then we're looking at price going all the way up. But if it fails, let's say price fails to break this high again and then drop to this low, look for possible way to buy this market up. Then that means you are not trading in between this consolidation zone until there is reasonable breakout, because this is the problem that this market has been facing for a couple of days now. So now we want to get out of the zone. If it does come down here, trade it or wait for it to come all the way down, and then trade your entry at this level and wait for price to push up. If you take out liquidity, that would be great. And then wait for a pullback, continue your buy onto this level. Once you get here, take your profit, watch out for price action. And then if it break above it, then that means it's taking the eye out, wait for a pullback, possible pullback, and then look for more buys, because overall from the daily, the market is uptrend. Overall, from the 4 hour, the market is uptrend. But the 1 hour lower time frames are looking at bearish moves. So they are looking at bearish because they have problem breaking this low. So it's still bearish. So if we be able to break this low, if the market drop this low and break this low, then we should be looking for more sales. I hope that is clear, because you need to watch this video again and again to understand what I just said. But you see, this is the main area we're looking for break of structure, which is from the 4 hour time frame. We want to see that break of structure before we look for more sales. But if price push up to this zone, we should look for sale as well, because price reacted to that zone and sold before. So we want price to come up to that zone and sell again. The reason price was pushing back on this one is that there is this impulsive move, which price needed to fill about 61% or 50% of the retracement, and that's why it was dropping on that zone. See, this is how we were able to make some good money last week with my team, whereby the price came up there, we just sold, came up there, we just sold, and then this impulsive move, price came up there, we buy, price came up there. You know, it was just an amazing trade last week. So guys, this is what I want to pay attention to this week on GBpUSD. Now, if you have any question, you have any contribution, the comment section is good for us to use and pay attention to what the market is doing so that we'll be able to read your comment section and use the information you provide. Thank you so much, guys. And this is it. This is week 17 forecast on GBpUSD. So watch out for this zone. Recap again, you come to 4 hour time frame. You see that the market is still maintaining a higher high and higher lows apart from this consolidation phase. So now this is where the problem has been. Now we want the market to break above it or break below it to break structure before we look for a sell. If it breaks structure low, come back and break the structure, and then we'll look for possible more sales to the downside. But if it stays above this structure without breaking it, then we're looking at price pushing up to the zone and then look for a sell at that level and sell all the way, take profit here, wait for it to break that zone, probably sell again or buy from here, and then wait for price to push until the market will be able to get out of the zone. Maybe through our trading, we'll be able to see opportunity that will break this high and then continue to the upside. Otherwise, We just stick to the plan of trading the zone. That's it, guys, for me on GBpusd. I believe you guys are enjoying this video. Share this video and like and subscribe, and also turn on the bell notification. I'll be seeing you on Euro USD forecast in the next few minutes. Thank you, guys, and peace.